Here. This is the first video I'm going to be doing on the Yieldmax, the MSTY, and the CONY high yield funds. Couple of things. My background is pretty extensive in options. Something like 30 years I've been executing options. I participated in a Slack group with a lot of professionals in various disciplines in trading, investing, futures, forex. So I bring certain skills, they bring skills, and we share a lot. But I decided to do this channel because I've been focusing since 2009 primarily on dividends. And I guess the first rule of thumb is never to lose your underlying capital. It's nothing worse than underlying capital. It's nothing worse than you invest in, you chase a high yield, and in fact you get to the point where you've literally lost your underlying capital or a significant portion of it. That happened to me, slightly different than that description. It started as simple as I was doing a lot in oil and gas. At that time, 2011 timeframe, most of your high yields were REITs, a little bit of healthcare, and oil and gas. So I chose oil and gas because I believed in the commodity cycle. Through 9, 10, and 11, commodities have done very well. The problem was the geopolitical situation. So Stephen Harper, the then Prime Minister of Canada, decided that he was going to pass legislation, whereas the large oil sands companies that were paying 11, 12, 13, 14%, he wasn't going to allow them to have a tax break. So a lot of the Americans that were buying those for the high yields, so all of a sudden after getting high yields for 18 months, I lost about 40% under my underlying position in the capital. So my number one rule is try and understand what you're in, what are the possible risks, right? So one could say right now my two favorite Yieldmax funds are MSTY and CONY. What do they have in common? Well, they're both based off of Bitcoin and the progress we're having in Bitcoin with the halving coming up. If you look at NVIDIA, you look at AMD's Yieldmax, PayPal, Facebook, go on, right? Mostly it corresponds with the NASDAQ and high tech. And they've had a tremendous run, but I feel like with the markets such as they are, we could be very close to a peak in the NASDAQ, in the Qs, and in the large cap stocks. So I see alternative financial instruments such as Bitcoin, gold and silver. I've owned physical, I've owned futures. The stocks haven't really participated in the precious metals, but I can't wait to see a Yieldmax or someone else's fund, or I sort of create my own. All right, well, let me get into MSTY a little bit. So why I love MSTY is it's tied to MicroStrategy. Anybody that understands Bitcoin to some degree knows about Michael Saylor and a lot of his work, and the fact that they own 10 billion, it's probably a lot more than that now in Bitcoin. So let's take a look at what's happened. Here's my sheet, and a shout out to Rod, retirement on dividends, retire on dividends. He's laid out a fairly technical, numbers oriented, what did the funds do, he liked Tesla. So anyway, shout out to him if you're following him. He seems like a good guy. I learned how he accounted for the daily activity, and I sort of built a system similar to what he was doing, since numbers and spreadsheets and doing options are second nature to me. So let's take a look here. In March, the current synthetic or 950s There were a couple of trades today where, let me pull up that spreadsheet. So today in MSTY, there were a couple. You see a buy and you see a sell short for two options. So a long synthetic is where we buy a 950, and the reason we're paying 690, as you can imagine, we were at 1500. I think we closed around 1484 in MicroStrategy, and MSTY in the 27s, but it opened very aggressive and then pulled back toward the end of the day. So these were sold, and when you have to buy a 950, there's very little risk that you're going to close under 950. So your puts are pretty safe, and hence you're only getting $5 premium, right? And those expire on what, the 19th, I think? No, 3/28. These expire on March 28th. So a couple more weeks to go, and by owning the calls, your upside is there. If we close at 2,000 or 2,200 on MicroStrategy come the 28th, then selling these when you paid 690, it's like, you know, 950 plus 690, it's like 16. So you're going to still make a substantial upside if it performs how most people think it will. Part of the problem is not on the synthetics, because MSTY has continued to do very, very well on the synthetics. It's more about the actives, right? What are they doing in terms of March? So you can see here the last time on Friday the 8th, they rolled out of their previous options, and they put on some 295s. These are not the synthetics, these are just the calls, because the 950s are still active. But they did go out and do some 290. Whoops, I have CONY here, I apologize. Let me get the right sheet, guys. I moved over to something I still had active. Yeah, here's the MSTY. So there's 107 of the 950s that are still active, and 2 were put on today, right? I mentioned 2 earlier. So we sold 2, bought 2 calls at 690, and sold 2 950 puts. So you can see that the puts didn't generate much income, but we had to put out, by buying the calls, significant amount of money. So that was like $1 million that it cost us to put on that position. But we stand to do pretty well when we finish closing out a lot of these others that we have significant profits in. But again, it's paper profit. We haven't actually sold out of the position. So currently our March profits on MSTY are 1,080 that we've actually closed. So for those of you, I've been in this fund, I think, since the second day that it opened. So when you're buying this thing at 20, 22, 23, and you're setting at 35 now in the fund, you've done very, very well. But we have yet to get our first dividend, which very likely will be $2 or $3 unless we write some poor weekly calls and lose money, which can happen in a very volatile stock like this. All right, so let me go through a couple things here that people care about. This is our spreadsheet on some of the positions. You can see when we were back doing 1350 through 1430 and even the 1600s. We made good money on the 1600s. We made money on all 3 of the 1430s, okay, but not near as much as I think we had hoped to, because when we wrote those, they were well out of the money, 48.5%, right? So the ones that we didn't make money on because of the surge were the 1350s, right? We lost a little bit of money on that. We lost more substantial on the thousands. We opened at 1240, buying those, and had to buy them back at 45 because the price just soared. All the while, our synthetics were making money, but we weren't making money on the weekly calls. Although that's gotten better here with these. And we should do pretty well. Now, a position we did put on today besides the two synthetics that we added, the 950s, we sold two calls for 51.10 at 1900 strike. So 28% above the current strike with 4 more trading days to go now. So nothing is assured. We were up in the high 15s today, 16 on MicroStrategy, so it wouldn't surprise me to see us be at 19. Just hopefully we can close that out where we buy it back for $10 or pennies on the dollar. It just really depends. So we want something 19 or less in that close to optimize. So let's see, in our holdings, not a lot changed here. We're at 525,000 shares outstanding. The current net assets are about $1.8 million. We've got a little more cash position. We continue to hold the two treasuries, First American government money market. So the current calls, 105, are at the 1620. Okay, and that will be a test, right? We were in the 15s today, closing at what, 1484. So if we can hold off and not lose money on those, we got a nice premium. We paid $71.15. So we could buy those back if we're around 1600 or less and optimize the money on that. Just as a side note for some of you, synthetics, which the 1620 is not, it's been the 1950s, or 950s. Synthetic options where you don't own the underlying stock can be both short the stock or long the stock. What we're seeing for most of the fund managers now, especially when you take a Bitcoin underlying thing like a coin or a MicroStrategy that owns 10 plus billion in Bitcoin, is they're doing long synthetics. It will be interesting if some of the funds shift when the markets roll over, especially in the NASDAQ for your AMDs and your NVIDIAs and some of the others, Facebooks and Googles. If they want to put on the short positions when the market sells off, that'll be interesting if they take that. So it's simply currently to go long in the synthetics, you buy a call and sell a put at the same strike at the same time. So when you want to go short, bet short and make money, is you want to sell the call and you want to buy the put. Because you sell a call where it's at now, the stock goes down, you keep all the premium, and you buy the put as the stock goes down, the put appreciates. So it's exactly the opposite of the long. But a lot of people think the synthetics are only for going long. I put a synthetic on today for BITO. It's the first time I bought some BITO, which maps to the futures of Bitcoin. And I went out and sold 10 options around the 33 strike today. So what did I do? I believed it's going to go long, and I went out to 328 to the quarterly options. So I sold 10 puts and I bought 10 calls. I had a slight premium. I think it was around 22 cents that I paid today. It's up slightly from where I put the position on. So practicing these underlying techniques when you get better at them are helpful. So hopefully I can help you guys in understanding some of that. And again, a shout out to Rod, because I laid out some of my information in the same format that he's been doing. So he's been doing a really good job on that, and I appreciate his efforts. So wanted to give a shout out to him. There's not a lot here that probably hasn't been talked about, but I'll go over this more extensive in time. So today, the underlying MSTY stock, which is MicroStrategy, was up 4.11% from 1425 to 1484. It was up at 1580 or something, so it was up significantly and came back. And the same thing with MSTY. So we were up in the 36s. We may have touched 37, and we closed at 35.63. So we got out of the 4%, 2.92, a little bit capped, but not tremendously. So that's okay. I like the strategy of putting the 1900s out there, 28% out roughly with 4 days left. Okay, let's jump into CONY, which I mistakenly was talking about previously when I wasn't meaning to. Okay, so our actives here, there were no trades today. However, we closed at 254.17 in coins, so it's 1.67% above the current strike. So the 250s are where we're playing. This was put on the 8th of March, Friday, March 8th. Basically, we sold out of our previous ones and we bought into these, right? So it was a roll forward, extending a week. So now we have till 315 in the 250s. And we had till 3.8 in the 200s for most of you that have been following this. So on the active side of things, here's simply, Rod's good at doing this, putting your charts here and comparing them. We actually closed at 27.30 today. Let me update that. And one thing to show you back on my previous one, I put a chart on MSTY that's probably helpful to you guys using a different charting service. Just take a look here. I did a 3-month since MSTY is so new. So here's MicroStrategy, sort of flat, you know, going up and down 25% and all of a sudden taking off, right? A week or two into February. And we launched here on MSTY, following MicroStrategy, and we haven't done bad. So kudos to the fund managers. Although, as Rod and others note, it's a tough job. So when they get new cash from people, you know, buying the fund, when you see the shares go to, you know, 525 from 450 or something, then you're talking about capital they have to deploy. So sometimes they just run out and buy a weekly. You would think they would be skilled enough to buy the correct one, but between the volatility and doing it in a hurry, sometimes you get some poor executions. The other thing I like to do is I like to put some notes in here. What do I think will impact this in the near term? So I'm back on MSTY, and it applies the same to CONY. You've got your earnings estimate on MicroStrategy about 3 months after the last market. So after the market closed on February 6th. So the estimate is May 6th because they haven't given us. We have the BTC halving coming up, estimated to be between 416 and 419. So that's always produced pretty good Bitcoin runs, and it looks like it will. So I'm very bullish, but expect continued volatility. I mean, this is almost gaps, right? These are just a gap chart where the gaps may or may not get filled. Some get filled intraday and some just keep running because of the spike that we're in. And frankly, it's why I'm in these two funds. I may switch back after I think NVIDIA or, you know, some of my other favorite stocks that Yieldmax aren't following, and I'll put my own synthetics on, like Palantir. But I expect in April, beginning the very first part of April, a pullback in the NASDAQ. So could be 20% or so. But I think we're pretty good until that time frame. But I think in the second half of the year, precious metals, gold, Bitcoin will continue to do well as the dollar recedes. We'll see what they do, whether the Fed does anything in rates and tries to stimulate the market. All right, let me cover quickly back to my coin and CONY. So let's look at the 250s. Again, nothing happened there. Our March profits are 7.8. We've got substantial profits there if we close these all out, right? So we got 15,760 that expire not till 4/19, right? With an underlying strike of 250. So that looks pretty safe. It's just they're not booked till they're booked, right? So our synthetics are going to perform well based on everything. Can we get it right in the short term and on the weeklies? All right, hey, I wanted to thank everybody. I look forward to communicating more, your comments, what you want. I've got, again, significant experience. I'm going to be covering a number of other funds and some of my favorite strategies to maximize your dividends. Okay, guys, catch you later. Out of here. Bye.